All right, today I want to talk to you about a contagion that's about to hit the crypto markets. Now, you may say you're being alarmist. Why are you talking about the word contagion? Why are you talking about a contagion that's about to hit the markets? Because I'm looking at the markets and I'm seeing that there is something that's going on that is not reflected in the prices. When I look at the price of Bitcoin and I look at the price of ETH here on the charts, these prices don't reflect a potential contagion that is about to hit crypto. Specifically, the ETH price doesn't reflect this contagion that's about to hit crypto. So listen, if you do think I'm being alarmist, I'll ask you to give me the next 15 minutes. And if if after the next 15 minutes you don't believe me, then leave a dislike, leave a bad comment. But hear me out here for 15 minutes, because if I am right, then there is a chance that I could save you a lot of money if you just listen up for the rest of the show. So we're going to talk about a contagion that's about to hit the crypto markets that is not priced in yet. And I think that this video will save a lot of people a lot of money. So let's get the show on the road, guys. You may think I'm being alarmist. But when I said to you a few days ago, I said to you, I'm worried when Bitcoin gets to 78,000. And Bitcoin got exactly to 78,000. When I made that show, Bitcoin was at about 74, 75,000. I said to you guys, Bitcoin is going to 78,000. When Bitcoin gets to 78,000, I'm worried. And the reason why I was worried is because we were at the top of this flag. We were right here in the chart. And I kind of said, hold on a second. When we get to the top of this flag, we're going to start breaking down. The news cycle is going to change. And before we got to the top of the flag, the news cycle was positive. I don't know if you remember. But they spoke about the Strait of Hormuz actually being open. This is Iran's foreign minister. And he said, the Strait of Hormuz is actually open. And Trump also came out on Twitter and on Truth Social, and he said that that Iran said they'd never close the Strait of Hormuz again. But then bang, the Strait of Hormuz was actually closed. And so and the negative news cycle actually started to come in. It's not a coincidence. It's not a coincidence that when we get to the top of this bear flag over here, it's not a coincidence that exactly when we get to the top of that bear flag, the news cycle swung the other way. We went from a positive news cycle to a negative news cycle. And that is where the contagion comes in. They talk about show me the charts and I'll tell you the news, or you'll always find the news to back the charts. The charts were telling me that the news cycle was gonna turn. And as soon as the charts hit the key level of 78,000, or just over, I said 78,000, got to 78,302. That's when the news cycle started to change. That's when the war went from peace talks to closing the Strait of Hormuz again, Iran and the USA fighting. And that's when we started to get the news about the DeFi hacks. We got the first DeFi hack that we got on the weekend was this $292 million hack against KelpDAO. And that's the beginning of where the contagion starts. And the next headline we got was around 𝗏𝗏 actually also being hacked. And now, as I believe that we're on the verge of a potential contagion. Now, the contagion may not play out, but you need to see the signs, because if it does play out, you need to be ready. And I'm going to show you all the signs. I'm going to show you what the contagion is. I'm going to show you exactly what signs you need to look for to avoid the contagion, because right now we're on the edge of the cliff. Either we're going to fall over the cliff or we're not going to fall over the cliff. So if that sounds good to you, do me a favor. I see that there's 400 of you in the chat, but there's only 50 likes. So help me get distribution. Hit the like button. That helps us get a lot of people to actually watch the show. And it's a big show today. We are talking about a potential contagion. So as I mentioned to you, we got to the top of the bear flag. And I still see 50 likes. Let's get to 100 likes, and then we can continue the show. In the meantime, I'll have some water. Do you want to smash the like button as well?
Okay. Let me test it.
It's working, huh? It's working. All right, let's go. It is working. Let's go. So, the thing with the bear market is that you can't trust every rally, and that bear markets actually have certain patterns that they follow. And the patterns, unfortunately, look something like this, right? The patterns look like this. We get big drops, and then we get the market trying to fool everyone to thinking that the bear market's over, and then we get a big drop again. If you look at the 2020, 21, 22 bear market, that is exactly the pattern. Here it is: 1, 2, 3 big drops, 4 big drops, and eventually we got to the bottom of the cycle. And that's exactly what I'm worried about for this market. I'm not sure what's going to happen in this market, but I'm super worried that this is exactly the same thing. That's why I said to you when I made the show, I said to you guys, I'm worried. I know we're going to get to 78,000. I had no doubt about it. But the question is, what is going to happen next? And what the concern was is that once we get to 78,000, we could be in this part of the pattern over here where we go down to the next level. Now look, if we had broken out, or if we do break out, it's not too late to break out, then I'll be very positive, then I'll be bullish, because then we could have broken the bear market and we could be back in a bull market. But until then, I have to be cautious. And right now, there is something in the works that can actually get us to this level over here. Let's talk about it. Let's talk about what that thing actually is. And let's also compare it to the previous bear market. So let's talk about the previous bear market. The previous bear market looked something like this. There's the chart of the previous bear market. And you can see that effectively what happened is we went down over here somewhere, Luna collapsed. Then the market recovered slightly. Then we started to get the whole spate of centralized lending liquidation. I don't know if you remember that. If you were around, if you weren't around, let me tell you exactly what happened. There was a token called Luna. The Luna token collapsed and went to zero. It was a massive, massive, massive protocol with a algorithmic stablecoin that was backed, that was attached to it. What happened was, first Luna, the protocol, collapsed. And then, because it collapsed, it started to expose problems specifically in centralized lending. And most of the centralized lenders actually went insolvent, right? So I don't know if you guys were here and if you remember, but Three Arrows Capital was a big casualty. It wasn't one of the centralized lenders. But then we got other big casualties. We got Celsius, which pretty much went bust. We had a Genesis that pretty much went bust. And effectively, the entire centralized, not the entire, but the majority of the centralized lending protocols in the industry actually went bust in the next cycle, in the last cycle. Why? Because there was an event. That event presented a stress test on the centralized lenders, and most of the centralized lenders never made that stress test. Some of them did. Some of them weren't exposed. Someone says Luna was awful, same as FTX. The reason why FTX collapsed was because of Luna. So if Luna hadn't collapsed, FTX wouldn't have been exposed. And that's the part that actually worries me now. Because what happens in a bear market is, in a bull market, everyone's making too much money. And so most protocols don't go under, and most things don't go under in a bull market. Problem is that when you get into a bear market, then you see who's wearing clothes and who's not wearing clothes, right? So you get into a bear market and you can look at this and you go, hold on a second. You can kind of see who's wearing clothes and who's not wearing clothes. And in the last cycle, what we realized was that the centralized lenders were not wearing clothes. Most the centralized lenders got caught up in lending, which was irresponsible, unbacked, not backed enough, etc., etc. And then we went through a cleansing period over here, right? So in the hype, everyone was making money. Then there was the big hit. And then we went through a cleansing period, and most of the protocols never survived the cleansing period. But those that did actually ended up making money, right? Now, why am I talking to you about this? Is because that was in the bear market. That was in a cycle where we were making these highs and then dropping, and then making these highs and then dropping. And I'm seeing a similar pattern that's actually happening now. The only thing is that the things that are actually being stress tested are not actually the centralized lending protocols. This time, it's actually the decentralized lending protocols. What you will remember is that in the last cycle, we said the reason, so this is all happening, all the centralized lenders are basically going insolvent. You should have put your money in DeFi. If you had put your money in DeFi, you would have seen the collateral, it would have been transparent. And in CeFi, you didn't get any of that. Celsius didn't show you any of their real reserves, as didn't Genesis, etc. And what we said at the time was, we said, don't put your money in CeFi. If you put your money in CeFi, then, well, it's dangerous. Put your money in DeFi. And the reason why it's so important that you actually put your money in DeFi is because if you put your money in DeFi, you can see the collateral on the chain, you're borrowing against somebody else's tokens, and everything is fine. And so in the last cycle, when we got stress tested, we basically said, move from CeFi into DeFi. The problem is that in this cycle, the centralized lenders aren't really a big thing anymore. Yeah, there are some big centralized lenders, but it's not a big thing anymore like it was in the last cycle. In this cycle, everyone went to DeFi, and DeFi was having an amazing, you can call it an amazing time. And then in the last couple of weeks, we started to get a spate of hacks. We first got the drift hack, and then on the weekend, or just before the weekend, I think it was on the weekend, we got KelpDAO being hacked. The hack wasn't a very big hack. It was a $300 million hack. Now, when I say not very big, it is very big when it comes to DeFi, but hold on a second. DeFi has 8.5 or had 85 billion in total value locked. That isn't a very big number. 300 million was hacked. DeFi has 85 billion. Okay, well, you know, it happens. We do get hacks. We are used to hacks in crypto. The thing is that when this actually happened, all of a sudden, the people started to to exit 𝗲𝗡. Now, I want to talk to you about what actually happened here. So first of all, you need to understand what is KelpDAO. KelpDAO is a liquid staking protocol. What is a liquid staking protocol? You basically stake your ETH and you get a liquid staking token that represents your ETH in KelpDAO, right? And then you can use that liquid token, the token that represents your liquid staking, your ETH. You can then use that token to borrow against in DeFi and in stuff like that. That is what liquid staking is, and KelpDAO was one of the best, one of the most successful liquid staking protocols out in the market. Okay, on the weekend, they get hacked in a very, very, very sophisticated hack. We'll talk about the hack in a couple of seconds. And full disclosure, I'm not going to go into all the details of the hack because it's very, very, very technical, and seriously, it's above my IQ and your pay grade and Hardest's pay grade as well, right? So we're not going to go into the thing. The main thing is, as this tweet says, the bad part of this whole DeFi saga is it's sad to see how much of the fundamentals we believe from 2017 to 21 we're having a hard time. Innovation has been stagnating, etc. Now, let's go into what actually happened. So, KelpDAO gave you a liquid staking protocol, and you could take that liquid staking protocol and you could put it on AAVE and you could borrow against it. AAVE is the biggest borrowing and lending marketplace in DeFi, right? You basically go to AAVE, you put your tokens in there, and you can borrow against your token. So you've got a liquid staking ETH, which is worth $2,000 or $2,300. They will allow you to borrow against that liquid staking protocol. That's basically what AAVE does. It's the biggest lending protocol. The thing is that when this hack happened, people started to worry about AAVE, and they said, hold on a second, is AAVE fully backed here? I mean, is AAVE actually going to be able to pay back its loans? And they started a kind of bank run. And that's exactly what happened. People started to withdraw their money from AAVE. So you can see, this is what Looks on Chain says. It says, due to the KelpDAO exploiter borrowing. So what this KelpDAO guy did, he took the liquid staking tokens of KelpDAO, put them onto AAVE and borrowed against them. So he didn't actually want to go and he didn't liquidate the KelpDAO liquid staking ETH because he knew that they could freeze those or whatever else. And so he went and he said, no, what I'll do is I will take the hacked tokens, I will put them into AAVE, and I will borrow money against the hacked tokens. And that way I will leave AAVE, or the AAVE borrowers and lenders, with the RS ETH or whatever it's called, the genius, right? A bad hacker would have taken the RS ETH and tried to sell the RS ETH until eventually they were all frozen on chain or whatever else. A good hacker actually thought 3 steps ahead. And what he did was he took the RS ETH, put them onto AAVE, borrowed on AAVE against them, and basically left AAVE with a bad debt. And so what happened was everyone started to take their money out of AAVE. And when everyone started to take their money out of AAVE, that started the first part of the contagion, right? And the first part of the contagion is that right now, if you're on AAVE, you can't actually withdraw your money. And the reason why you can't withdraw your money is because all the pools are at 100% utilization rate. What does that mean, 100% utilization rate? Well, in this pool, for example, there's wrapped ETH, right? And they're saying, look, there's a 5.9 billion reserve size. And basically, we have utilized the entire okay, this one's a frozen pool, but basically all the pools are at 100% utilization rate, which means that there is no more space for risk. In other words, if there's a utilization rate of 100%, if I'm willing to lend you 50% of your ETH, then you deposit 1 ETH, which is worth $2,300, and I'm willing to lend you $1,150 against that, and that's it. All the money has been borrowed and all the money has been lent, and we're at 100% utilization rate, which means that you cannot withdraw money out of AAVE, because in order for you to withdraw money out of AAVE, you basically need the money to become unutilized. You need people to pay back their loans. And if people don't pay back their loans, you can't use that money again. And so right now, AAVE is at 100% max capacity. And at the same time, people are starting to realize that DeFi, there's a spate of hacks in DeFi, and they want to get out of DeFi. Now, this is a tweet from Geo9. He says, I don't think people realize how bad things are getting at AAVE right now. All core markets are at 100% utilization. That includes 3 billion USDT and 2 billion USDC stuck. That means you can't withdraw your money. A long post on why and how we ended, and he writes this long post on how and why we landed up here. I'm not really interested in going through a long post. I am interested in talking about the hack and what actually happened. So, the hack, everyone is linked to AAVE. And all the pools, all the borrowing and lending protocols are actually kind of linked to one another, right? And so this guy says, Emperor Osman says, the 𝗓𝗏 ETH is so damaging because of how deeply integrated it is across DeFi. 91% of all lending protocols are seeing simultaneous outflows. And that's exactly what's happening. In the last 24 hours, or in the last 36 hours, probably 15% of all the total funds locked in DeFi have actually been taken out of DeFi. I don't know the exact number, but let's say 20% of the entire DeFi industry has basically been cleaned out or been withdrawn because people are saying, I don't want to be here. It's too risky. I want to get out of this DeFi thing. AAVE has obviously been quite badly hit in the last 24 hours. Let's quickly look at the TVL in the last 24 hours. Oh man, I closed the TVL. Let's go back here and just look at TVL. In the last 24 hours, you can see that their TVL has dropped significantly. I think the TVL's dropped from 26 billion. Is that right? No? 26 billion. No, it can't be 26 billion. Can't be 26 billion because it's under 15 billion. Oh yeah, it's dropped from 26 billion all the way down to around 17 billion, which is massive. It's lost, and the reason it would have dropped more, but the thing is that they've frozen all the pools because they're at 100% utilization. In the last 24 hours, Ethereum lost more TVL than the entire Solana ecosystem. 14% of the Ethereum TVL has dropped. 5% of Solana's TVL has dropped. And all the other chains, basically people are starting to exit their money out of DeFi, right? And this is, of course, happening on Ethereum. And, Vitalik basically says, no, we're not a high-frequency trading chain. We are the most secure decentralized chain in the world. And he's right. But the protocols on it are basically getting hacked. And this is about to start a contagion. Let's talk about why there's a contagion, because I think the contagion is actually broken up into two parts, and you need to understand both parts of the contagion. The first part is immediate, and the second one is ongoing. Or in fact, the second part is ongoing the other way around. The first one is ongoing, and the other one is immediate. And I'm going to talk about the immediate one later, because that represents the biggest risk here. And let me tell you something. If the ETH price moves down 10 or 20% in the next 24 to 48 hours, good luck out there, because it's going to be an absolute bloodbath. And I know you might think that I'm being alarmist, but just listen up till the end, because this is important. Let's talk about the softer part of the liquidations, of the contagion. Let's talk about the softer part. The first part of the contagion is that we are dealing with very, very, very sophisticated hacks. This is a post from 𝗓𝗓. 𝗓𝗓 is from Dragonfly. Dragonfly know their shit, and 𝗓𝗓 knows shit. He says, Layer 0 says it was KelpDAO's fault for running a one-of-one DVN setup. They had a multi-sig wallet, or a single sig wallet, which is basically a one-of-one. So one validator or one signature could basically hack the whole thing. The crazy thing is that it was North Korea again. It was a very sophisticated attack. North Korea didn't actually fully compromise. I'm not going to talk about the specifics, but let's just say there was a very good hack by North Korea. This is another tweet from Banter. He says, Layer 0 attack was not an RPC positioning. In a network positioning, when the attacker outside the trusted boundary taints a shared lookup, blah, blah, blah. And he says at the bottom, he says, that's a meaningful, scarier attack than any label suggests. And so why I'm trying to say this to you is because the first part of the contagion is we're dealing with much, much, much scarier attacks. We've seen two in the span of 2 weeks. Two that have almost crippled DeFi. First it was Drift, and now it is this. It is KelpDAO and everything else here. Now I'm not going to go into the specifics. It's very, very, very technical. What I do want to talk about here is this. So Justin Sun and OneKey's founder Yishi on handling the KelpDAO hack said, best case, negotiate with the hacker and offer a 10 to 15% bounty, which is what you can do if you're dealing with a hacker in the West and if the hacker's really scared of getting arrested. But that's not the hackers that we are dealing with here. We are not dealing with hackers that are going to steal $1 billion and then you're going to offer them $100 million and they're going to say, thank you very much, I'll take the $100 million. You know why? Because these hackers are North Koreans, bro. These hackers are North Koreans. Now, I mean, North Korea is a country that doesn't even allow its citizens to use internet. But it's a dictatorship, and these guys, their full-time job is to hack. They are the most sophisticated hacking group in the world. It's called Lazarus. They are the most sophisticated hacking group in the world. In fact, they have stolen over $7.3 billion. And we know of over $2 billion just in crypto. I mean, just think about this. KelpDAO, $290 million. Drift, $285 million. That's $600 million, give or take. Bybit last year, the same bunch of people stole $1.5 billion. We know that from crypto, these guys have made $4-5 billion from crypto. So they're full-time business. And it is probably, I want to say, backed by the government. They are the most sophisticated hacking group in the world. And they are going after crypto. In fact, no, they've always gone after crypto. The only thing is that now they've got a little help from their friends. Now they got a little help from my friends. The friends is AI. So up until like a year ago, these guys were hacking, and it's like me and 𝗏𝗏𝗏 and you sitting in a room, and we were hacking, and like, we were like, imagine us like a lot smarter, Asian, with our glasses on, and like all of us like in a room, and they feed us like once a day. They bring like a bowl of food, and they say, if you don't hack this, you're never going back to your parents. That's how it works in North Korea. Or they say something like, I mean, I haven't been there, but I hear that like, things like, if you don't manage to hack the big money, we're going to cut your fingers off. Okay, that's the shit that goes down there. So now it's not only me, you, 𝗏𝗏𝗏 trying to do the hacks. Now it is them plus AI. And the thing with AI, and I tweeted about this the other day, I said, hackers plus AI are much bigger than DeFi, are much scarier than DeFi. And it's true, because in the old days, me, you, 𝗏𝗏𝗏 used to sit in a room and we used to think about how to do things one by one by one. These things are looking for attack surfaces in parallel. Imagine that you have like an AI, and the AI says, if you do this, 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 and this, and this, and this in parallel, then you will be able to achieve this result. And they're doing multiple permutations because, I mean, it's just AI bots, right? And this is before the launch of like Mythos, which is Anthropic's Anthropic's model, which they say is so powerful that it's basically going to destroy crypto. So, and they haven't released it because it's so powerful. Imagine like you have a model, and you say, look, I'm not going to release the model because it's so powerful that if I release the model, it's basically going to destroy half the internet. That's what these guys are claiming, and that's what's basically happened here. So now you have hackers plus AI attacking DeFi protocols, which are open source and out in the public. Now, why are they going for DeFi? Because DeFi is open source. It's not like a bank where all their code is hidden in a vault and no one can ever see the code. The code's public. It's open source. Anyone can mess around with it. And the outcome is financial. I mean, just think about like what a honeypot is for a North Korean. They put him in a room. They say, look, that's the code. It's open for anyone to see. Hack it or you will never see your kids again. And they mean that in North Korea. Like in North Korea, they don't mess around. Anyway, so the first part of the contagion is a long-term contagion. It's like a long-term thing. The contagion is, as the AI models get smarter, the hackers have these AI models at their fingertips. And it's a race between DeFi protocols to do upgrades and to find the vulnerabilities against the hackers who have made it their full-time jobs to hack. That's the first part of the contagion. That's not the part that scares me the most. This is the part that scares me the most. Read this tweet. It says, if ETH falls here, because all the lending and borrow protocols are at 100% utilization, that means that every ETH is backed, every st-ETH is backed, every liquid staking protocol is backed by cash. The problem is that if you get a big move in ETH at the moment, and ETH goes down, then half of these lending and borrowing protocols actually become insolvent. Why? Because they're at 100% utilization, and all of a sudden, if you get a big move in ETH, all of a sudden, you've got to start these liquidations, and then you're going to start seeing bad debts. So, what do we need? Yes, it's true. This is true. You have to understand that this is true. If you're stuck in ETH borrowing against it at an 80% loan to value and paying up an elevated rate for a while can act as a form of insurance. That's if you can borrow against at an elevated rate. So, what am I saying here? I'm saying that we should hope to God that we don't get a big move in ETH now, because then a lot of protocols are going to take a lot of strain and some may or may not survive. In the longer term, the problem is that we've got hackers plus AI, and hackers plus AI are much better than DeFi protocols. Now, both the Drift hack and the other hack and the KelpDAO hack could have been avoided. Both of them were negligent. Drift had a 2 out of 5 multi-sig, and these guys had a 1 out of 1. Okay, you can't do that if you're dealing with hundreds of millions of dollars, and now they've learned. And that, I think, is the big thing here. The big question is is this the end of DeFi? Because the truth is, I agree with Waz. He says, listen, worst thing now is that these outflows are going to flow out. They're never going to come back. Why? Because you can go to the bank and you can get 3.5% on your stable coins. Why do you need to go into DeFi where you get like a 5 or 6 or 7% return, but you've got all these risks, and these risks actually materialize every Wednesday and every Thursday because the hackers have got AI. So what do? Is this the end of DeFi? I don't think it's the end of DeFi, but I think it's worth reading this tweet from 𝗟𝘁𝗲𝗏. He says, in crypto and DeFi, which is honest markets, when a component fails, those closest to the component, whether negligent or innocent, suffer the loss, and they're burdened with that responsibility. Unequal, but that's the way it works. That's what's happening to AAVE. AAVE did nothing wrong. KelpDAO was the ones that went down. The lender borrowed against his KelpDAO tokens, and AAVE is the one who's taken the big knock. In TradFi and banking, which is coercively manipulated markets, when a component fails, the entire society is forced under the burden of its resolution, and then the costs are socialized, equal but improper. So he says the former, with time, becomes self-correcting and self-improving, and crucially retains vitality. The latter, regardless of time, becomes stagnant and soulless. And so, is this the end of DeFi? No. But I do believe DeFi is going to go through a renaissance now. I do believe that all the protocols that are not security-centric are going to get flushed out. And I believe that they're going to have to adjust to a new world where there's AI. And some will, and some won't. And we're going to go through a tough time. But I think that those that emerge on the other sides are actually going to land up making life-changing gains. And that's what 𝗟𝘁𝗏 says. He says, each bear market in crypto must go through the valley of death. Last cycle, it was Luna, and it was FTX, and it was the centralized lenders. This cycle, it's AI plus quantum. Those that can survive AI and those that can survive quantum will end up giving us generational wealth. Those that don't, they won't. But that is what the risk return is actually about in crypto. And I think there's also good. He says, I feel sorry for the AAVE team. They did everything right. Clean contracts, proper audits, tight risk frameworks, umbrella safety. And they still got caught holding 196 of bad debt because the bridge they don't control got drained. Bad, but that's DeFi. But this will ultimately make crypto stronger. It will make DeFi stronger, and it will get us ready for a new age with AI. And unfortunately, there's just no way to stop this. There's no doubt in my mind that DeFi still trumps CeFi, and that the government can't keep sheltering the banks and all the lending institutions, or they can, but not for very long. And that ultimately we're going to go into DeFi. But when we do go into DeFi, it's going to be a real DeFi and not a bad DeFi like the one that we currently have, where people are using 1 of 1 and 2 of 5 multi-sigs. I think that AI will make, I think that in this age of AI, the teams are going to start using AI just as much as the hackers are, and they're not going to go into production. They're not going to release things. They ain't going to release things at all. They ain't going to release things unless they are production ready and they've been tested by AI. So that's the story. That's the contagion. There are two contagions. One is a much longer term contagion, which is DeFi is going to get fucked up by AI. So you know how to say that. DeFi is going to get messed up by AI and hackers, specifically hackers in North Korea. And at the same time, if the ETH price collapses in the next 24 to 48 hours before these DeFi protocols find their stability, maybe even longer, maybe the next week, then we have a big problem. And so you need to be watching the headlines right now to make sure that none of that actually happens. As it relates to the headlines, I mean, the war headlines continue. I told you it's all part of the negotiations, right? You know, they open the Strait of Hormuz, they close the Strait of Hormuz. Apparently now there is a new peace talks which are happening on, is it Tuesday? Will take place on Thursday in Washington. Oh, that's Israel. That's peace talks between Israel and Lebanon. We have to wait for the new peace talks, and when the new peace talks are actually going to be. In the meantime, the UAE basically went to Trump and said, listen, you want us to settle your oil in dollars. We're running out of dollars, bro. And we're going to start settling you in Chinese yuan, because that's the other currency that we've got, which is very bad, very, very bad. So Iran knows the longer that they keep this war going, the worse it gets for our friend Trump and for the Americans. I don't want to talk about this. We did speak about it a little bit yesterday, but I want to speak a little bit about it today. Two things, actually. The first thing is, as you guys know, hold on, let me just find this chart first. Here we go. Let's open this chart. Here we go. It's coming. So let's talk about this. Two things. The first thing is, guys, you know we are running a trading competition at the moment. The trading competition is on Blofin. Blofin is a non-KYC exchange. The trading competition, the market contagion coming for every crypto holder. Wow, what a bad title. Bad title. I must tell them, very, very bad title. Someone says smile run. So there is a trading competition. There's a trading competition. It's on Blofin, but Blofin is a non-KYC exchange. There's $120,000 up for grabs. And the whole idea here is to show you guys that we can actually trade and make money in a bear market, right? We want to show people that we can actually make money in a bear market. So there are multiple teams here. You can join our team. There's a link below to join our team. I don't know if I can beat Sheldon and Dylan and Chento when it comes to trading and technical analysis, but I do have a trick up my sleeve, right? The trick that I have, which I think that I can beat all of them at, is I can't beat them on short-term trades and scalping. Chento trades like a 3-second chart. I can't trade a 3-second chart. I don't know about you. Maybe you can sit in front of your desk and trade a 3-second chart. We can't beat them. Where we can beat them is if we trade headlines. Why? Because this market is completely driven by headlines. When the Strait of Hormuz was opened, the oil price went down. We could have traded that. Yeah, you can see it over here. When the rejection of the peace talks happened, you can see that the prices went after Tehran, new talks with Washington, so new peace talks, bang, the prices go up. When the pump and dump happened on Rave, bang. When the hack happened on KelpDAO, if you were first or amongst the first and you got that in milliseconds, then you could have made money. And so that's the strategy that I'm going to adopt in this trading competition. I'm not going to beat them on lines and charts. I know that. Where I am going to beat them is I'm going to trade faster than I'm going to trade the headlines, right? So how do I trade the headlines? I use the news terminal. What is the news terminal? It's a bunch of AI agents that have gone through every single account that tweets, is on Discord, on Telegram, and whatever else. And every time that these accounts tweet something, if the AI believes it's relevant, it sends them to the news terminal. But it sends them to the news terminal in a matter of milliseconds. You can see how many milliseconds that is. I think, how many milliseconds is that? I can't see. It's very dark. 400 milliseconds, 300 milliseconds. Now, this is linked to your exchange. You link this to your exchange. And so if, for example, I want to trade the Trump meme coin because Trump has said something, literally, watch this. Okay, my trade is open. It took milliseconds, and my trade is open. And then if I want to close the trade, I can close it within a matter of milliseconds, right? And that's the advantage of news trading. So what I've done for this trading competition is I've loaded up an account with like $10,000. And all I'm going to do is I'm going to trade the headlines. Because I know that if the right headline comes and I just hit the buy button, I can beat these guys, right? Now, if you want to trial the news terminal for free, not asking you for money, you want to trial it for free, here it is for free. You got 1 month free here. If you join Frontrunners, which is our Discord group, you got it free forever, basically. So as long as you're part of Frontrunners, it's free forever. Guys, it's free. Go and check it out. It is, number one, it's very addictive and very, very powerful, right? Because every single time, we'll wait a few seconds, but every single time news actually comes out, we can trade it within milliseconds, right? So, for example, something came out here. Trump warns of escalation if Iran ends ceasefire. So the question is, do I want to trade gas, which it's picked up is there, or Trump? Let's say I want to trade Trump coin. Bang, I'm long. And if I want to close that position, bang, I'm short. Okay, I want to just quickly refresh this because I want you guys to actually see the trades in the console. Okay, so let's try that again. Just give it a second to load up. And let's see if it actually shows your trades in the console. Okay, let's just see why it's not showing them here. I think it's because I opened and closed a window on this machine. But long story short, you can actually manage all your positions from here as well. So what I recommend you do is sign up. It's free. Tomorrow we'll do a workshop after the show to show you guys how to actually trade the news. It'll be a free workshop. We'll do it after the show tomorrow. All right, that's it for now. Let me know what you think about the contagions. Let me know if you think we're safe. I will see you again tomorrow. Until then, trade well, my friends.